Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is May 13th, Tuesday. We're going to cover one we have covered on the channel before, J&J, Johnson & Johnson. This is out of the healthcare sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday. We take a look at a company stock that's pulled back on the day. We also do requests, so if you have a company you'd like me to cover, I can definitely add that to the rotation here. And we see if it makes it through my watch list. We'll see my watch list in a second. If you could do me a favor, watch the videos to the end, share with anyone who think that might find value in the content. That helps with the YouTube algorithm. And dropping a comment, obviously, down below, that helps as well. Thank you so much to all the viewers and subscribers of the channel. The channel continues to grow because of people like you. This is the Vested Interest Stock Screener. This is the criteria that I look at. It's a high-level screener that I use to go through thousands of companies, and it gives me a quick look into the company to see if I'm interested in doing more of a deep dive into the financials of the company. Then we jump into their balance sheet, their income statement. We look at stuff like their debt to equity ratio. Are they paying down debt? Is their revenue expanding? Are their margins expanding? We do a discounted cash flow analysis on the company to try to figure out the cost or range that we're willing to pay for it. So this is just an initial screener. If it does make it through the screener, that does not necessarily mean that I am buying the company. It just, again, means I am interested in doing more of a deep dive into the financials. Since Johnson & Johnson is one in my portfolio already, this is a quick back check on the position to see if it still meets the initial screener or if I need to do more of a deep dive into the financials to see what's going on. Maybe there's some problems with the stock if it doesn't meet this screener. So it's a back check on existing positions or an initial screener on positions I don't currently have to see if I'm willing to do more research into the company or not. It's a way for me to save time, really, right? Initial screener, if it doesn't pass it, I just move on to the next stock and go on down the road. If it was one in my position like Johnson & Johnson is and it doesn't pass the screener, then it means I'm going to be doing more of a deep dive to make sure that it still meets the criteria I've set up for my investing criteria. Must meet 5 of 8 to make it onto my watch list. If it was a company out of financial sector like a bank or an insurance company, we would add in price to book. All right, back to Johnson & Johnson. Check them out on their homepage at www.jnj.com. That's www.jnj.com. Can't get much easier than that. That is their homepage where I pulled this information from. Discover J&J. As part of our company's evolution, we are updating our branding and uniting our innovative medicine and medtech businesses. Those are really their two arms. They did have a recent spinoff with Kenvue, so their consumer discretionary sector is gone. That is a separate entity, again, called Kenvue now. So Johnson & Johnson itself is specifically a healthcare company at this time with these real two arms, right? Innovative medicine and medtech businesses under the Johnson & Johnson name to demonstrate our collective power in healthcare. Our refreshed identity reflects boldness that conveys our ability to tackle the world's toughest healthcare challenges while staying true to our heritage of care and humanity. So they're a healthcare company, and under their two arms, like the innovative medicine, you've got our diverse portfolio spans multiple therapeutic areas: oncology, immunology, neuroscience, cardiopulmonary, and specialty. I'm going to butcher this name, I'm sure. Ophthalmology, I believe is how you pronounce that. If someone else knows how to pronounce it, maybe put that down below, but I believe that's ophthalmology is how that goes. But again, I may be butchering that. And then on the other side, you've got the medtech business here. From advanced mapping and navigation to robotic-assisted solutions, we are delivering care in the hardest to reach parts within the human body, and by focusing highly engineered and intelligent treatments exactly where they're needed, we're protecting what's healthy and delivering care to what's not. We're helping to restore sight in ways that feel more natural and imperceptible, so people feel more like themselves again. So they are really using, recent technology, biotechs, I believe, as well as some robotics to help really dial into care, specific care for parts of the body in a more targeted manner, I guess is the way to put it. But again, you can check them out on their homepage, www.jnj.com, a healthcare company doing healthcare things. Now, the reason we were taking a look at them, down 3.7%, and it was a big drop for healthcare overall. I know a lot of people are watching UNH out there, United Health, huge drop for them, but I think Cigna dropped. I mean, there was CVS dropped. It's another one in my portfolio. I think everything across the healthcare sector dropped today, and I'm assuming part of that is because of the recent announcement that we had from our elected officials that we have an executive order where they're trying to cut some healthcare costs. Now, executive orders don't really do anything unless it is a law that goes through Congress. It does not really have much teeth. We've had executive orders in the past, and they really are a recommendation more than a requirement for a company to follow. So some companies may indeed cut their prices. Other companies may leave them exactly where they are until they are forced to do so by law. That's just the nature of an executive order. It really only has teeth for those people that fall under the executive branch. It does not have any teeth as far as a legal application that companies have to follow. That's just the nature of executive orders. They are not laws. Laws come from our legislative branch. That would be Congress, the House, and Senate, not from the president. Not to get political, but this is part of the reason we probably saw a drop across the healthcare sector, because this was announced, I believe, yesterday as far as the executive order specifically around healthcare costs. And I am for bringing down healthcare costs, don't get me wrong, but an executive order is not the way to do it. All right. Johnson & Johnson, ticker J&J, is who we're talking about again out of the healthcare sector. Closed out the day at $148.43, down 3.7% on the day, so a big drop on the day. And again, overall, I saw a lot of healthcare pulled back, if not the whole sector. Primarily, the majority of the sector definitely pulled back on the day. 52-week range as low as $140.68, as high as $169.99, and they've been really, bouncing around this 140, 150, low 160 range for a while now. So it's not just this drop, but you can kind of see it here in the mid 150s throughout the day before it's dropped. That's kind of where it's been bouncing, right around the mid 150s. Maybe gets up into the 160s for a little bit, but then comes right back down. So good time to be picking it up in the 140s. That's where I like it. Again, I am long. We'll see my position here in a minute towards the end of the video and see what my cost basis is. But it's not too far off from what it is currently. I like it in the 140s. I'd love it back here at 140.68. I'd be adding some, but it's getting very close to my cost basis right now. Market cap of 350, and it is within 15% of a 52-week low. Market cap of $357.133 billion. Beta of 0.41, so it is less volatile than the overall market. Price to earnings ratio, $16.51 per share. So again, price to earnings, you are paying $16.51 for every $1 of their earnings. Earnings per share is $8.99. You're getting $8.99 in earnings for every share that you buy. That's what that means. Earnings date, July 16th. So coming up next month here, forward dividend is $5.20. They do have a current dividend yield of 3.34%. I like that. I like Johnson & Johnson anytime the dividend yield is above 3%. Ex-dividend date, May 27th. So coming up towards the end of the month, you want to be buying this on the 26th or before to be able to lock in that next ex-dividend date, right? And it looks like they're going to pay out on June 10th. So again, May 26th or before, you want to be buying to lock in that payment on the 10th. Don't wait till the 27th. That will not guarantee you the June 10th payout. 1-year target estimate, at least according to Yahoo Finance, $169.98. So it looks like they would be 1 penny off of their 52-week high, at least according to Yahoo Finance, over the next calendar year. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. It is just a quick check. That's why I like it. And to do that, we look at their 5-year dividend yield average at 2.76%, compare it to their current 3.34%. Over here where it says 3.34%, same number. Since 3.34% is higher than their 5-year average at 2.76, that speaks to undervaluation, at least according to dividend yield theory right now. Now, Johnson & Johnson has been paying out dividends for over 60 years, and their payout ratio remains in the mid-50s. So very nice to see that even though they have, decades and decades worth of payouts and consistently raising those payouts as well, their payout ratio remains respective in the mid-50s. I like anything under 75% for companies outside of REITs, business development companies, closed-end funds, that sort of thing. Now, dropping down, I want growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends to match. You can see here going back to December 2022, 17.1 billion in free cash flow. 2023 looks like a jump up to 17.7. 2024, 18 billion. Trailing 12 months, 18.5. But keep in mind, again, we're only in May, so the trailing 12 months does include some of 2024. They are repurchasing shares as well. Going back to 2022, 6 billion pulled out. 2023, 5 billion. 2024 looks like down to 2.4 billion. Trailing 12 months looks like they're continuing that trend of 3 billion pulled out of the market. Now, I am saying that it looks like this is pretty close to maybe flat 2022 to 2023, maybe a little bit of uptick, 17.7, but they did decrease by a billion of shares that they didn't pull out of the market. And in 2024, that went down significantly. So I'm definitely seeing a downtrend here from 2023 to 2024. So we aren't going to say growing free cash flow on this one because of the downturn right there in 2024. Now, jumping over to stockanalysis.com, they do have 15 analysts that have taken a look at this. I do recommend more than one source. This is just one of the two sources. I've got a couple others that I go to as well, and I recommend more than one source so you can make sure the information you're looking at is accurate and up to date. It's a way to back check the information. They do have 15 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $150. It currently sits lower than their lowest estimate, so if it came back up to that 150, that would represent a 1.06% increase from where it currently sits. Average estimate of $169.33, pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 14.08% increase from where it currently sits. And if it happened to hit their high of $215 estimate, that would be a 44.85% increase, and you could collect that 3.3% dividend yield while you waited for that high. Jumping into statistics, I like to look at return on capital employed. I want 10% or better here. They're sitting at 16.62%. I like that. EPS growth, I want 5% projected over the next 5 years or better. They're sitting at 17.54. Very good overall, with revenue growth forecasted at 3.74%. Now, as I mentioned, I am long Johnson & Johnson. I do currently hold 126.0357 shares. My cost basis is $148.65. So I am down slightly, 0.14%. Like I said, it is very close to my cost basis. I would like this to drop a little bit lower so I can actually reduce my cost basis a little bit. So that's why I mentioned I'd like it right up against that 140, but it may not get there. So this is not a bad price in my opinion. It's right in line with what I was paying for it or have been paying for it in the past. Right back to that same drop where I was buying it here late last year. Not sure exactly what month, but I definitely was adding some of this last year around the 140 mark as well. So I like it in the 140s, but again, I'd like it a little bit lower than it currently sits, but it's right there up against my cost basis. Quarterly payer, as we mentioned, payout ratio is 57.87% according to stockanalysis.com. So this is a little bit off the 55% that we saw with Yahoo Finance. So again, that's why I like more than one source. You can make sure the information you're looking at is accurate and up to date, but well under the 75% that I'm looking for. Still gives them plenty of room to raise that dividend over time, and they have been growing it for 63 years with nice dividend growth at 4.37%. Buyback yield is positive at 3.53%. Means they are efficiently buying back shares, pulling more shares out of the market than they are putting into the market, which is what we want to see. We don't want to be diluted as a shareholder. Shareholder yield positive at 6.99%, which again is what we want to see. They do pay out like most companies on the March, June, September, December timeframe. Going back in time here, November 2022, $1.13 in dividends, raised up May 2023 to $1.19, raised up again May 2024 to $1.24, and their most recent raise, May 2025, up to $1.30. I think I've already accounted for that dividend raise, but I need to go look at that and make sure it's in there. I'll definitely have it. If it's still at $1.24, I'll show the raise for $1.30 in our Sunday portfolio update. All right, let's check out the screener. A lot of green here, ladies and gentlemen. Understand the business. It's a healthcare business, right? Pharmaceuticals. Looks like they're working with some biotech and some robotic enhancements to help with surgeries and that sort of thing. Very targeted medical. Growing free cash flow, no. I'm saying we had the one down year. Growing dividend, yes, definitely growing dividend between 4 and 5%. Dividend payout ratio is in the mid 50s. Check there. Dividend yield theory says they're potentially undervalued right now. It is within 15% of a 52-week low. Return on capital employed is at 17%, so it's well over the 10% I'm looking for there. And earnings per share growth, again, was well over the 5% there. So we're looking at 7 of the 8 that I would need to make it onto my watch list. It is in my portfolio. I am not really worried about this company. Again, it is one I would like to add to in the low 140s. So if it was a drop under, let's say, 145, even though it's right about my cost basis right now, again, I'd like it to drop a little bit more so I can bring down my cost basis. But it's not a bad buy right now. It's, like I said, within 15% of a 52-week low. Definitely meets the criteria to do more of a deep dive for me if it wasn't in my portfolio and it's right up against my cost basis for whatever that is worth. All right, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like J&J you'd like me to cover in the Stock Pick of the Day series, drop it down below. I'll try to work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing during educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount. You're not going to lose. Always do your own research. Invest based on your situation, circumstances, and select the criteria, or seek the advice and counsel of a certified financial advisor. For those of you who made it to the end of the video, really thank you for watching all the way to the end. Don't forget to hit that subscribe button if you haven't done so already. Hit the thumbs up button. Share with anyone you think that might find value. Drop a comment if you would. And again, thank you for watching to the end.